Hi there, Forex traders. Welcome to this weekly heads up at Admiral Markets. We're going to take a look at the Forex market and see what kind of interesting opportunities lie ahead of us this week. But before we do that, we're going to take a look at this risk disclaimer explaining that trading foreign exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this video and recording is for educational purposes only. So please pause the video to read the entire disclaimer. And I do thank you for your attention on that. We're going to take a look at the pound dollar, the dollar Swissy, the dollar CAD, the EURCAD, and EURAUD, where I believe are going to be some interesting opportunities this week. Before we do that though, please let me explain that we do have a live trading room. All right, so this is just a heads up, but we will go into matters deeper and more detail on Tuesday, tomorrow, from 7:45 a.m., 15 minutes before London Open, where we take especially a look at swing trading. Intraday trading, however, we focus on primarily on Thursdays, and Wednesday we do both. So I welcome you to all of these webinars, but if you do have a preference, then you can choose accordingly. Tuesday, one more time, is swing trading. Thursday is intraday, and Wednesday both. Now, we also have educational webinars. For example, tonight at 5 p.m. London time, Tarantula is going to go through some interesting topic. Thursday as well, we have a advanced session here on range trading. So definitely very interesting to look at these educational webinars and use that for your trading. And that's why we also have these live trading rooms, by the way. Not only that we provide theoretical information regarding trading, but we'll actually use those concepts and implement them live. And you'll see that live implementation done by me on those Tuesdays, Wednesdays, Thursdays live trading room. Make sure to follow Admiral Markets in the social media. And now let's take a look at the economic calendar. Now this week, we don't see that many high impact Forex news at the moment or economic news. We do have German IFO Business Climate Index that will influence the euro tomorrow. Otherwise, maybe later on this week, we, for example, have GDP announcements on the USD on Thursday and the CAD on Friday. Otherwise, a pretty quiet week. Let's head over to the charts, and the first one I do want to show you is the pound dollar weekly chart. And the reason why is just because of the bearish weekly candle we have on this pound dollar. You can clearly see a pretty big wick at the top, a bearish candle close, indicating maybe a sell-off at the end of this bull run we've had several weeks. All right, so that could be a reversal signal for the pound dollar. Now that weekly candle also occurs right at the bigger 157.50 top, indicated by the red horizontal line. So it's interesting. It's going to be interesting to see if this pound dollar could break, for example, below last week's low at 155.30, 155.40. If we do, that might be an indication that this pound dollar is ready to fall more. So I'm going to keep a keen eye on that level. I'm going to zoom into lower time frames to establish an entry and exit. But from an analysis point of view, this is what I'm thinking of. And we'll take a look at the pound dollar definitely more, for example, in tomorrow's session, and every session, of course, we take a look at the pound dollar. Now, if we zoom out a bit, we can see the weekly triangle, of course. So not only is this weekly low important for intraday and interweek trading, but also for long-term position trading. If this were to be a break of the triangle to the downside and this a hook back, then maybe that resistance rejection weekly candle could signal the continuation of downside. All right, that's a bit of a speculation there because it's a very long-term analysis, but definitely key last week's low. One more bearish signal on this pound dollar is, of course, that rising wedge we discussed in last week's weekly heads up video as well, and that's indicated by the purple lines. And we broke that rising wedge with a few bearish daily candles, so that's another indication. Plus we have, if we zoom into the 4-hour chart, we had divergence between those tops, so that could indicate and signal maybe the likelihood of a bigger retrace. Okay, so that's something we still have to confirm by, for example, also breaking the support line indicated by black. So I would say the bears and bulls are a bit mixed control. If we do break to the upside, we would need a break of, for example, a trend line like that to indicate, and a break of the high probability to indicate that we're going up again. Bears might want to wait for the break of this low back to the trend line, and especially if we break the trend line. All right, so those are potential areas, spaces where both the bulls and bears can trade the pound dollar. Now, this is the dollar Swiss franc daily chart, and the reason why I'm showing you this one is just to indicate what the dollar is hanging more or less at the bottom here, very close to support, but hasn't moved away from that support at all. In fact, we're right at it. So it's going to be interesting to see if this is a bounce or break spot for the dollar against the Swiss franc. If we do bounce, you can see there is a pretty good spot place and a space to move to that upside back to the top. Now, if we break the bottom, there's not that much space before we bump into horizontal support around 90. So time will tell. I'm going to keep a keen eye to see what the dollar might do this week. Of course, we should realize as well that with August ending sometime sooner or later, if it's this week or the first week of September, volatility and price movement action could start to pick up again as the summer trading comes to an end. This is the dollar CAD, and we talked about it last week, and I was showing you the potential of the dollar CAD to break to the upside, and was indicating this wide open space we had here at the bottom of the trend channel. And if price were to be able to break out of that correction, that we have that space to the upside. That's exactly what happened. I closed that trade for a good profit to the upside and a good number of pips, and that was just great trading with the dollar CAD to the upside. And the reason was obviously that it was back at support, you can see here. And yeah, the currency couldn't break that support and bounced to the upside. We had those pips. Hopefully you joined me, but this was a rejection wick here. So maybe we'll see a bit of resistance depending on how this resistance and chart pattern might form. If we get a bull flag, that would be a good indication of more to come and more upside, and a move up to the 106, 107 area where we do have resistance. Or if we fall a bit more sharply, then maybe the support will kick in a bit lower, back maybe at these tops and the bottom of the trend line again. So we'll have to see how this rejection wick, how it influences price. It depends how price reacts to that rejection, if we get a continuation or if we get a bit of more reversal to the downside. Also on the EURCAD, we see clearly CAD weakness kick in last week, and we had a very bullish weekly candle. If you look at this candle, obviously a massive candle compared to the other candles before that, and just a bit of a wick there. So if we zoom back out, you can see that there's of course resistance levels around 143, 144 right in here. So now we're at 141.50, 141 approximately. So there could be still some space left to the next resistance level. And in that regard, if we get a hook back, maybe for example to the broken top around here, that could be a good longing area to that target right in there. Okay. Now it depends how the price will respond, if we get that deeper retracement or not. If we do, that might be a bouncing area when we retrace this week's or last week's candle. Now, if we don't make that aggressive move down, but we instead make a shallow, for example, a shallow bull flag in this regard, like that, then a break of that bull flag to the upside could be also a good method of catching the upside potential to the next resistance level on the weekly chart. That is the EURCAD. This is the EURAUD, and just like the pound odd, we've had massive upside continuation last week, and we did warn you for the pound odd last week of that continuation possibility and potential. That made really a lot of pips to the upside. Now the EURAUD too, but right now it's very close to that major resistance. So it's something we want to be aware of, that despite the huge up moves we've seen, we are at a resistance spot and we should be more cautious at its current place. Okay, so we are making actually right now a triangle indicated by these black lines here. So that triangle is an interesting spot because it's right at the resistance. Now, if we were to break the triangle to the upside, I'm not saying that the upside is not good, just be aware of that resistance, okay? Because we are in an uptrend, we are making an impulse, a good speed to the upside here. We're making a pause, a very shallow retracement, so that upside does make sense. Just have to be careful of the resistance. If we break the triangle to the downside, that is still counter trend, so you want to be careful of that, and you want to be aware of potential support areas like these broken tops, for example, and the fibs. So that wraps it up for today. Please take a look at our Admiral Markets website. Go to admiralmarkets.com, click on education, click on webinars, and you'll get this page. And you can see that tonight, Tarantula or Nenet is going to talk about formation of basic chart patterns. You can sign up for that by clicking on sign up right here. Of course, we have our live trading session, live swing trading tomorrow. You can sign up just as the Wednesday, Thursday, and a range trading educational topic on the 29th of August, 6 p.m. Central European time, just by clicking on sign up. All right, so I encourage you to take a look at that, and I look forward to seeing you there. Have a great trading week, and have a great week, everyone. Cheers.